What is up, YouTube? This is the Working Investor. In this video, we're going to talk about a ticker symbol ULTY or ULTY. This is a yield max ETF. This is unlike any other ETF out there in the space of high yield dividend ETFs. And this is a completely unique ETF by yield max. I watched Jay came on yesterday. Jay is a fund manager of yield max, and he came on the Discord of the Khmers, and I was able to watch at least 2 hours of the conversation going on. I had a couple questions as well. And one of the things that he did mention, and I understood this because I saw this in other interviews and by reading the prospectus, but not just the prospectus, but also when you hear from the fund manager's mouth itself, you know what's up and coming. And basically, the way he describes this fund is like basically a hedge fund within itself. Very, very promising. And going through the prospectus, these are the notes that I took down from the prospectus. So you don't have to torture yourself. So like he said it's a hedge fund with himself. The prospectus says it holds between 15 and 30 securities, but minimum 5 at minimum. The expense ratio is a 1.14% expense ratio. It's more expensive than the, I think the 0.99% or something like that, or 0.95, I can't remember. I think it's 0.99% with the single stock ETFs, cover call from YieldMax, but it's cheaper than the YMAG and YMAX, which I think is around a little bit more than 1.2. Basically, per the prospectus right now, of course, there are some changes coming up. You get exposure via the underlying that they hold, either indirectly through a synthetic cover call, or direct exposure. So they could just buy just straight up the underlying and do direct cover calls on it. And the way they choose these underlyings, according to the prospectus, they use, it sounds like algo, like AI as well. Plus, I mean, on the interview with Jay, he did mention that every company uses AI. I mean, AI is the term that they use now, but people have been using, they used to call it the algorithm. Basically, people use technology or, some kind of screening tool. And then, of course, there's the human element that makes the final executive decision. But basically, according to the perspectives, they look at frequent and quantities screening process. So they're looking into implied volatility, which means the more volatile an underlying is, the more richer the premium potential is. Hence, it may be a good candidate to trade and make some option premium to translate into higher dividend yield. Volume, because if something doesn't trade enough, it's not really tradable, and you kind of get stuck in the trade, and liquidity, where they kind of go hand in hand. And of course, U.S. securities only, so you're not going to be exposed to international, just to know what it does. The prospectus does mention that it does seek to try to reduce risk by diversifying into multiple sectors. No sector in particular. They're not just predicated on the tech sector, let's say, but they try, they're not specific. They're just looking for whatever meets the parameter, and then they go ahead and invest in it. Right now, here's the caveat. Right now they do, according to prospectus, it says cover calls, synthetic cover calls. I think I also saw they mentioned rolling positions. And per the interview, per the discussion on the Discord with Jay, he mentioned that in about a month from now, it seems like they've requested SEC approval for this, and if everything goes through, they'll have pretty much many options. Pretty much the sky's the limit. He mentioned that they could do collars. Basically collars protects you. One of the cool people like something called SVOL, which one of the cool features of SVOL, which is a different ETF. They do sometimes collars, they do protective puts. So if the market, there's a black swan event, or you're anticipating a black swan event, you could put in a protective put against your covered call, and that's how you protect yourself. You use some of the proceeds of the profit from the call, and then you purchase the protective put. So you got some premium right now, and you have catastrophic protection. They could do short puts, option repairs, spreads, hedges, which they all go hand in hand. But basically, they have a lot more availability. And even now, even before the approval of the SEC filing, they've already done a great job changing out their holdings, what they hold. I did look at their recent holdings, and I know I made a video a while back, but obviously their holdings could change from week to week, day to day. Right now, I just downloaded the spread. This is what they're holding. You can see they're holding Space Mobile, Calumet, I don't know what that is, Coinbase, Enphase, Robinhood Market. They've had a Robinhood before. They have S&P Biotech, daily S&P Biotech. They have LabU Mara, which is the crypto mining company, MicroStrategy. So you see they have, like I mentioned in my other video, that the three highest payers in YieldMax funds are NVIDIA, MicroStrategy, and Coney. And they have all three, because if you go down the list, you'll see here they have NVIDIA, MicroStrategy, and Coney. They also have Redfin, Sunrun, and this is really shocking. Now, I know I mentioned in my other videos that I was very impressed because in 2019, what I understood from the interview with Jay is that there were a lot of changes with the SEC. They used to not have the ability to do the option-based ETFs or single stock ETFs. The floodgates opened up in around 2019, and that's why you see we're living in a new era of high yield dividend ETFs, not your grandparents, dividend funds that pay, which are not bad, Johnson Johnson, Pepsi Cola, Campbell Soups, who pay, sub 5% dividends. We're talking about much higher dividend return. Now, they also stopped allowing triple leverage. You'll notice there's a lot of funds out there. They do, double leverage ETF, 1.75% leverage ETFs. But you're not going to see any more triple leverage ETFs. That's already outdated. So the ones that are out there are not banned. They're still around, but no new ones are going to be made. And one of the old OG ones is the triple leverage NASDAQ. And look at this. Not only is ULTY right now, at this point, trading triple leverage Russell 2000. Remember, triple the leverage, triple the implied volatility, triple the premium. I know that people get very scared with higher implied volatility, but even if you look at the charts of the triple leverage funds, they still trade relatively within a range. They just have more volatility. So now they also have the triple NASDAQ. So we have triple NASDAQ and triple Russell 2000. They also have Tesla, which is one of the highest payers as well from YieldMax, is up there, Upstart. So look at these holdings. So just with changing up the holdings itself, their NAV has been more stable. And let me talk about some positions that I did today. And let's look at the chart for a moment. Now, I looked at the last three ex-dividend dates of ULTY, and it was, I believe it was June 14, July 17, August 15. And look what happens recently. And you can see I did, if you notice, I did reduce my positions, and I'll get into that in a moment. But if you look over here, you go back the past year, let's look for just the last few months. Let's go to June. You see right here, June 14, there was ex-dividend date, and the price dropped quite a bit, and it never really recovered from the 1496. Even at the peak, it was 1430, so you never actually recovered. And then it dropped, and remember, July 17 was the next ex-dividend date, and boom, it dropped, which we understand, but we don't see it recovering at all. And then August 15. Now, if you notice, it's starting to flatten out. If you notice, they started making some changes because the NAV, of course, a lot of these high yield dividend ETF funds, it's not the worst thing if the net asset value drops a little bit. Obviously, these are not growth stocks. They're income stocks, they're income ETFs. So you're not expected to see 10% growth year over year for the most part. There are some unicorns out there, and we're all looking for the unicorns, but then you're paying because you're not getting as much dividend return. So you want to look at total return. But having a 45% drop in from February to September, so that's 7 months. That's pretty bad, that rate. We're going at an accelerated rate. But the thing is, if you notice, on August 15th, there was the last ex-dividend date, and you could see that it was trading. It kind of, it's not as bad. The chart is starting to flatten out. Again, past performance or relatively past performance is not indicative of future gains results, but they've done some changes with the holdings, and this is only part one. I think this could be a sleeper because, and I've been in touch with the Oracle, aka YieldMax TV. Shout out to him, and I'll talk to you about his strategy. But yeah, I agree with him. This is probably a sleeper company. This could be a massive beast. 80% dividend distribution with relatively stable. If you get stable NAV, and then you get an 80 something percent, what do they say here? 83% or something, that's a no-brainer. That means total return is wonderful. Even if you have 10% reduction in NAV, net asset value, or you want to call it the price, that's a 73%, almost 74% total return. You know what I mean? If that's the case, that's a beast. So like I said, this is all right now, just with a change of allocations. Soon there's going to be part two, which is going to be the new allocations, and there's going to be the new strategies that they could do. They could do hedges. They could do all kinds of cool stuff. It's a cool, fun experiment. The thing is that I did reduce my position. As you saw, I had 1,000 shares and I reduced it to 900 shares. I looked at the charts. I only had a chance to peek at the market late on Friday, and I saw that my position in ULTY was up, and my spidey sense was like, hey, it's time to core number compound. It's time to rip off the top, like I learned from YieldMax TV, aka the Oracle. And did I do it? No. I only had a few minutes before market close. I didn't do it. See, ideas are a dime a dozen, and they're good to have ideas. Ideas is what is the path to success. But the most important thing is the execution. You can have all the ideas in the world, but if you don't execute it, it's worthless. There's something called knowledge and something called wisdom. People know that smoking cigarettes is very harmful for you. It's knowledge. Doesn't mean you're going to stop smoking. Wisdom means making wise decisions and going ahead and stopping to smoke. So there's knowledge and wisdom is to do it. The execution is the most important thing. So today I ripped off the top for a few reasons. I ripped off because my cost basis was $10.80. And I was up, I guess, over $350. And also, second part is my initial intention was to get to $10,000, not to, so I kind of wanted to make it look aesthetic and pretty and do 1,000 shares, but I want to I want to keep this holding $10,000 for now because I have other investment goals. Like I mentioned, my RDTE, if you could see right here, I bumped up the share. My goal is 10K for RDTE. I'm already 1/5 in, and I've basically ripped off the top from ULTY, used some of the proceeds, and I've brought it down closer to my goal of holding, and I'm putting it into ULTY into RDTE for now. Not that I'm saying I'm pessimistic with ULTY. It's just that I have a goal and I have an allocation, and I want to stick to it because I have other goals that I want to do. What I want to watch and wait. Hopefully this will, I'm cautiously optimistic. Hopefully this will be an amazing stock. But I also want to, hedge my bets as well. And this is the video that YieldMax TV, he mentioned. He did a great job basically, ripping off the top $3,800 off the top. So, shout out to him. Like, it's so funny. I was thinking about it and I didn't do it. And after market close, I noticed his video and I'm like, oh man, he actually did it. So I actually, thank goodness I had an opportunity on Monday to go ahead and rip off the top. Anyways, I hope you guys enjoy. Have a wonderful trading week. This is the Working Investor, over and out.